everyone, welcome to the Stock Market Morning Prep video for Thursday, May 15th. Markets in the red yesterday. Dow Jones down 101, Nasdaq down 29, almost 30 points, S&P down 8, and the Russell down 18. So the two standouts are again the Nasdaq and the Russell 2000. Dow Jones broke its winning streak. It, as you all know, made new highs, Dow Jones, S&P. But remember, there are laggards of the indices. They are not leaders. Transports are. They as well made new highs, but you have to understand here we have really bad price action in Nasdaq and the Russell. And if you remember, if you were trading back in the day, 2000 and 2008, we had breakdowns in the Nasdaq and the Russell, and about 3 or 4 weeks later, the S&P and the Dow, along with the transports, followed suit. I'm not saying that we're going to break down today, tomorrow. It is monthly options expiration. There's a lot of put and call open interest in the spiders within about 5-handle range right now. So right within about 5 points of where we're trading at. So I do think that more than likely it'll stay in the range because the large firms have a vested interest in selling premium. So I do think that you're going to see the market range back. Doesn't mean that the market can't sell off another 100 points or 200 points for that matter in the Dow. But you have to realize that I don't think any big movement at all is going to happen. If you could see here, here's the 5-minute spider chart where we had a gap up here on Monday, and pretty much that was the end of it for the first half hour, and went sideways up until the last hour. We had a little bit of short covering, and the same thing happened here. We had a movement in the first hour, if that, and then market sold off. And if you were looking to get short, nothing happened all day. And then pretty much yesterday, same thing, a little bit of selling into the close. So this is terrible price action here. And I showed you the new highs, New York Stock Exchange new highs chart yesterday, that indicator I showed you, where the indice is moving, but the stocks in the indices are not moving at all. Very little movement in a lot of these stocks. Now, obviously, if there's a catalyst, an earnings play, a downgrade, and I try to look for that. You have to try to look for that because there's no volatility in these stocks at the moment. Now, I do think that after we get through options expiration, we should see movement in these in a lot of these stocks coming into play again, whether they be to the downside and or to the upside. But again, it's options expiration, and we all know the shenanigans that the market makers play. So what you have to do is you're going to have to be patient. I get a bunch of emails. Well, I'm not doing anything. Is there anything to do here? Should I be doing something? Well, if there's nothing to do, you do nothing, and that's part of being a trader. Is sitting on your hands waiting for opportunity to come. So if you make two trades a week, you're better off doing something like that than just getting chopped around, because this is just all chopped. I mean, I don't have to show you. I mean, look, this is just nasty, terrible price action here. This is not what you want to see. You take on a position and you're looking for movement, and then just reverses back. I mean, this is just absolutely horrific volatility, and that's not what you want. Then it dies, and then we jump up, we gap, and then we just literally go in ranges. We have one movement, and if you're waiting for, like I do, I always wait for the first 15 minutes. You're waiting for the first 50 minutes. The first half hour happens. You don't wait for the pullback. You get the pullback and nothing happens all day. Same here. You get the pullback. You look to get short now because we reversed. We made new highs and nothing happens. And then the movement happens at the opening, and then just sideways movement. And then you have a little bit of selling and or buying. So just really not really good price action. You can see that here. And I just wanted to show that to everybody. Getting a few emails and saying, what do you think I should be doing? And really, again, if you're not seeing anything, don't do anything. Wait till the opportunity comes. We continue to see breakdown. Back to the markets, by the way. We continue to see breakdown in certain asset classes, and I continue to see two things. I see the Japanese yen, spot yen, okay, which is inversely correlated. Remember, if you're looking at the dollar yen, the pair itself that's correlated with S&P, continue to hold up here while the markets were making new highs. That's not a good sign. We should continue to have market divergence, and one of the sides, whether it be a breakout to the upside and or lower, one of them are going to win, the bulls or the bears. So, and it's right now it's playing tug of war. Again, you throw in the options expiration, I don't think you're going to have much movement here. Okay, but we have to be ready, and any anything could happen. As you can see here, we have this inverted head and shoulders, we have the ascending triangle, and we have a lot of overhead resistance. But this could break out like at any given time. And if it takes this out, then we'll start setting up targets to the upside. But if that does happen, I would see additional pressure in equities. Now, the bigger picture is bonds. Bonds are not selling off. I do think the longer term picture bonds are lower. But bonds are not selling off. We have this inverted head and shoulders. We have the slanted neckline we broke out of. And as you can see here, we're flagging breakout. We had a pennant. We broke down a little bit. Boom, we broke out again. And we're up again just under 4 ticks. So you have to realize that this is not a good sign. And bonds are the smartest guys in the room. No question about it. So you have to pay attention. When something like this sticks out, you have to pay attention. And I would be looking to buy TLT, look for pullbacks in bonds into the moving average, and I'd be looking to buy TLT. Now, the upside target, like I showed you yesterday, is 142.27. And that is a large target. Now, this is the target of the head and shoulders. We could put up some extensions, which I'll do tonight for tomorrow, and see where some short-term targets are. But the bigger picture of this head and shoulders is 142.27. If that starts to happen, and I do believe that it can happen, I think you'll have some downside pressure in equities. And again, I think it's healthy. No one's looking for a crash. We never want to see that because it takes a lot away from people that are holding positions, longer-term investors, and nobody wants to see that. What we like to see is a little correction so we can start buying stocks again and buying with conviction. Right now, you buy a stock, you look to hold it, and the stock rolls right over again at the end of the day, and that's not what you want to see. So, having a little correction, an 8 or 10% correction, it's no big deal. It unwinds the overbought reading. It actually brings people back into the marketplace instead of just trading these algorithms. So that's why I would like to see market come in a little bit. So we're at the 1272 extension. We did break out of it. Now we're holding, right? So now we're looking for that 1618, which is right around the 1916, 1918 area, give or take a couple of ticks. But I wouldn't doubt this market to rally up first before it sells off. If that were to happen, I would short basically with 2 hands at the 1618 extension, holding a tight stop. Okay, but right now the market's not telling you anything. We are in bullish symmetry. We have all the moving averages on our side. We are at the 1272 extension, but remember, we're at extensions. Market is at extensions. Usually, markets start to reverse. Now we look at the Dow Jones. These little ovals I have, these are when markets made new highs, sold off. Market made new high, sold off. Market made new high, sold off. High, sold off, and we made new high yesterday. 2 days ago, and now we sold off. Now, is this the start of another little sell-off, maybe a 4 or 5 day sell-off? It could be. But if we look at pattern recognition, it doesn't lie, and that is probably one of the starts of another pullback with the Dow Jones. Now, you take a look at the transports. Same thing, just don't have the oval. Market made new high, sold off. Market made new high, sold off. New high, sold off. New high, sold off. New high, I'm sorry, not new high. New high, and now starting to sell off again. So this is what we want to look for. We want to watch the transports because the transports are the leader, and no doubt about it, making series of higher highs and higher lows is quite bullish. But you only have one leader out of the 5 that are moving, and you have the 2 laggards that down the S&P moving. That to me, that's not. I don't think that's enough to warrant new highs in Dow, S&P, and in transports. I think everything needs to be aligned. All of the indices need to move, and we'd like to see bonds move lower, not higher, when the other indices are making new highs. So that's the warning flag. That's the warning sign that I'm looking for. And then you have the last 2 I'm going to show you is the IWM. And I'm showing you indices only today, and actually the last several videos, because the indicators, remember, are lagging to price, and they're all pointing in one direction, which is pretty much lower. And I'm not going to waste everybody's time just showing. So I show them to you when I do think that it warrants it. Okay. So anyway, we all know that pretty much most of the indicators are pointing lower. We have the IWM here, which is the Russell 2000 ETF, and you can see we broke again the 200-day moving average. This is the EMA, this is the SMA. We broke both of them, and now we're coming to our last-ditch effort of 108.50. Now, if we take 108.50 out, guys, look out below. I'm telling you, this is something that right now you have the VIX at its lows. Okay, very very cheap. You can buy protection very cheap. Premiums are very cheap when you have the VIX at its lows. But when you start seeing the VIX starting to move higher, and we start to break out, which I'm paying close attention to, and I think you should as well. That's where you have to be patient, and you have to realize there'll be plenty of opportunities to start shorting the market if the market does decide to roll over. Okay, and lastly is the Qs. Take a look at the Qs. Now the Qs are holding up a little bit better because of the fact that Apple is heavily weighted in the index in this ETF. But again, it is also starting to roll back over again. Now we did take out the downtrend line here in the Qs, but if you looked at the Nasdaq is a different picture. So it actually looks worse than what the ETF does. Okay, so just pay attention. And be patient. Okay, be patient. The opportunity will come. You sit in front of the screens all day. I'm scanning through hundreds of charts, and I see nothing actionable that I like, at least to put money at risk. So I take a step back, and then and let it come to you. You'll see it'll be really easy. So today we focus on. I would probably suspect some range-bound trading, but if we start taking out yesterday's low, then you can start looking to sell rallies. If the market can give us a rally to sell, because as I showed you, we were basically range-bound all day, and then when you come into the last 45 minutes of trade to start establishing new positions before the end of the day, it's kind of ridiculous. So just be patient out there. When in doubt, cash is a position. But be ready and start looking for trades. I have a bunch of trades on my watch list that I can't wait to initiate. I'm just looking for the right moment as far as the market and, of course, the trigger. Have a great day. We'll speak to you tomorrow. Take care.